Nate, wanted to talk to you, obviously, with tomorrow being Veterans Day and all, and you being a veteran and celebrating the Marine birthday this week. I saw that post on Facebook. We wanted to talk real quick. Obviously, some amendments that were passed this week are very beneficial for veterans in terms of the tax exemptions. But, you know, the VA loan is something that a lot of people have questions about or concerns about, and with it being Veterans Day and it being a no down payment loan, I wanted to give you a chance to touch on a couple of topics of the VA loan for all the veterans out there listening.
Okay, no problem. I'll just go over it real quick. The first thing is there's a lot of misconceptions out there about the VA loan itself. A lot of people think the VA itself funds money to individuals to buy houses. So, you know, after they completed their service and their minimum requirements, they get something called a certificate of eligibility from the VA. And a lot of people have this misnomer that they say, just because I have this form now I'm guaranteed a loan. Well, not necessarily. What happens is the VA guarantees a portion of the loan to the lender who ultimately makes the loan. So in other words, if I'm a lender and I'm going to loan someone money, if you're a veteran and you have this certificate of eligibility, then I have a guarantee in place to where if that veteran doesn't pay me, the VA will pay me some of the money I may have lost.
So you're insured in a sense.
I'm insured in a sense, but it's not the VA. So it's not an automatic, first of all. But the other thing too is, you know, with a VA loan, there's a multitude of benefits. On a purchase side, there's zero down payment. Anytime you get a house and you buy a home and you do not put down 20%, just about every loan program out there is going to require that you carry monthly mortgage insurance. On a VA loan, you do not have any monthly mortgage insurance, so it's a true 100% financing loan product. The rates are very aggressive. We've seen 30-year fixed rates, 3.25. So on a purchase side, if you're buying a home and you're a vet or you have eligibility and you're not putting down 20%, 9 times out of 10 your best bet will be a VA loan. In addition to that, a couple other unique features about it is on a refinance. People who have a VA loan in place, you can actually do what's called a streamlined refinance, or the technical term is interest rate reduction loan, IRRL. And what that means is you can actually refinance your home without an appraisal. So even if you're upside down, you could refinance your VA loan without an appraisal, and you can get a very low rate. Like I said, get down in the very low threes right now in this market. And it's a good benefit. We're doing a substantial amount of these right now, actually, due to the way the market's been and the way the rates have dropped.
And there are a lot of people out there in that situation that maybe don't know that. You know, they're like, I can't refinance, it won't appraise, because the norm has always been it's got to appraise for me to refinance. But with all the programs that are out there today, that's not the case anymore, and specifically with a VA.
Yeah, and every loan product is like that right now. You know, people, it's funny, people focus so much on, well, my checking account makes this much, but if I move to this little money market, it'll get me this many more pennies a month. But they neglect to look at their mortgage. And I'm like, there's hundreds of dollars a month laying there, through a simple refinance. And it doesn't mean you have to add a ton of money to your balance to do it. You don't have to bring any cash to close. It's a very affordable way to do it, but reducing your interest rate right now makes so much sense. I talked to a guy the other day, and I think he had about 25 years left on his mortgage, and he didn't want to refinance to a 30-year because he said, tack it on the years. And I explained to him, I said, your payment is going to drop so much money.
You can just pay the principal.
Just pay that same payment you're already paying now on the new loan.
And it'll pay it off quicker.
And every month you have an extra $300 being applied to principal. Long story short, same payment, no cash to close. He shaved off 6 years of his loan.
That's
just by dropping his rate. No cash to close, no extra money per month, and simply shaved off that many years.